Welcome to another day in the Matrix. This is Red Pill Podcast 156. I hope you're all having an amazing weekend so far. We have a lot to cover in today's podcast, so we're going to jump straight into things. But before we get started, get relaxed, get comfortable. If it's a little bit earlier in the day, go ahead, grab yourself a cup of coffee or tea. Or if it's a little bit later, maybe a glass of wine or beer or any beverage of your choice. I myself am just going with some plain water today, keeping it nice and simple. So let's jump straight into things. If you are new here, welcome to the Wolf Pack. It's so great to have you here with us. If you've yet to get access to our Discord server, just go ahead and send me a direct message here on Patreon with your Discord username, and I will reply back in a Patreon direct message with the Discord server invite. Please don't comment anything below or email me regarding Discord access. I won't be able to help you out that way. Please follow those instructions I just shared. And we're doing great with the altcoin voting system in the comments section below this red pill. Please make sure to leave a comment of a cryptocurrency altcoin that you'd like me to check out in next week's red pill. And whatever gets the most thumbs up are the projects that I'll pick. We usually do about 4 to 5 different altcoins every week, on top of the usual Ethereum and XRP and Bitcoin analysis. This week, we're going to be checking in on Akami, Veracity, Flux, AMP, and then doing a little bit of a recap on Hex, eHex and pHex. It's been a little bit of time since I last checked in on those projects, and there's plenty of people here in this community that are interested in those particular projects, and I'll be sharing my thoughts. And moving forward, just make sure whatever coins you guys submit in the comment section below this post inside of Patreon, you have made sure that there's at least 1 year or more of chart history in TradingView. That way, we can make sure that we have some data to work with when we do the TA, as well as please don't comment any of the projects that I've covered in the What I'm Investing in special. I just did one about 2 weeks ago, and we went over 15 different altcoin charts. We're still seeing some comments show up like Zilliqa and Theta. Those are projects that I've already covered a couple weeks ago, and I will only be covering those projects when I do the What I'm Investing in specials moving forward. The next one will be in about 2 months from today, and I'll keep doing them as we progress through this bull run. So, welcome to Red Pill Podcast 156. I can't believe we've done 150 of these. It's been every weekend, every Sunday for 3 years now. So this is like technically the 3-year anniversary of the channel. I think next week, moving into April, will be like the full confirmed 3-year anniversary. But it was pretty much around this time, 3 years ago, that I started this journey with you guys. And I just want to start out with lots of gratitude and appreciation, and we'll do something special for next week. But for now, you are all well aware we are moving into eclipse season. Within the next 24 hours, we will have our lunar eclipse, the first lunar eclipse of 2024. So we're officially in eclipse season, which I personally consider is a full month time frame regarding the energy that impacts the markets. So pretty much from right now all the way over till the April full moon. That's what I would call eclipse season. And since we have new members joining our community all the time, let's quickly recap the differences between solar cycles versus lunar cycles and what effect eclipses have in each of those phases. So I'm just going to quickly open up the Bitcoin chart and show you what's going on. So over here, we're just going to be looking at this past cycle and in the current cycle that we're in as our examples. And to simplify everything for everyone, we're currently in a solar cycle since this eclipse over here in April of 2020 last year, in 2023. And when we're in a solar cycle, this makes solar eclipses more powerful and lunar eclipses weaker. Whilst during a lunar cycle, The lunar eclipses are more powerful, meaning they're more bearish. And the last lunar cycle we were in started on the lunar eclipse that was right here in May of 2021. That was during the all-time high of Bitcoin, effectively. And this followed by a 55% correction into the start of our lunar cycle. It was an eclipse right over here in mid-May, if I remember correctly. This correction that happened in the month of May of 2021, this simultaneously ended the cycle's alt season for a majority of the altcoin market. We did have a little bit of a buyback. Bitcoin did double top. We did see some isolated altcoins go up a little bit higher, but the majority of the altcoin market started to correct and had its cycle highs before the lunar eclipse right here. So we were in a lunar eclipse, a lunar cycle from this lunar eclipse over here all the way until right here. And I'll cover that in a moment. So I have videos in the past where I've gone over this every cycle, showing you the effect that the lunar phase has on Bitcoin and the solar phase has on Bitcoin. And to summarize it and make it all very simple, when we're in a lunar cycle, we're in what we call bear markets regarding cryptocurrency. When we're in solar cycles, we're in what we would call bull runs. And during this last lunar phase, which started over here that I brought up, every lunar eclipse after May 2021 was incredibly bearish. And we even had Terra Luna go to zero during a lunar eclipse in May of 2022. And then we had FTX crash and Sam Bankman-Fried going to jail and all that stuff regarding FTX and FTT token that happened on the lunar eclipse of November 2022. And that time frame was also the market bottom of our recent crypto bear market. We also had a lunar eclipse happening right over here, which effectively definitely ended the entire crypto bull run nearest the top. So if anybody remembers whatever podcast I did where I covered all of those cycles, please feel free to share it. I just wanted to give the quick summary today because I know we have some new people here. We have a lot of new members, and there is some confusion when it comes to these things. But as we inch closer to this upcoming solar eclipse, I've been getting a lot of questions. So I thought today I could just give you a little bit of a recap in the first 10 minutes or so of today's podcast. But getting back to this, with regards to this lunar eclipse that happened in 2022 in November, after that we pivoted bullish, moving into the first solar eclipse of our solar cycle. This is exactly what I was preparing everyone for back at the end of 2022. And ultimately I started warning people about this over a year and a half ago to take advantage of the end of the lunar cycle and the first phase of the new solar cycle. Now, I know it's not easy to navigate this stuff because there is such limited data with Bitcoin and there's such limited data overall with cryptocurrency. But now that we've seen this turn out the way that it has, and we've seen what these lunar and solar cycles do in every single iteration of these bull and bear markets for Bitcoin, I think it's safe to say that this is probably one of the most powerful and accurate tools to determine the energy of the market, whether it be in an uptrend or it be to anticipate a downtrend. Anyways, now here we are, and we're approaching the upcoming solar eclipse on April 8th. It's about 2 weeks away, and this will be our third solar eclipse of this solar cycle. And usually after the third solar eclipse of our solar cycle, which usually aligns with the post-halving time frame, is when things really start to get bullish and Bitcoin starts breaking out into price discovery, at least considering the past two cycles. And so far as Bitcoin trades below 69,000, that's still technically the case. So let's just go back to some of these iterations and kind of explore what I just said. We have 2017 over here. You see this third solar eclipse is marked green. And the real bull run breakout was about 2 months after this particular solar eclipse. And in 2020, we had the third solar eclipse here. It took us much longer, actually. It took us about 6 months, 180 days or so. And that's to be expected with slightly lengthening in the cycles. So like this slight lengthening of cycles is to be anticipated. And that would make sense going from about 60 days into a pretty noticeable bullish territory, and here 180 days. And when analyzing what Bitcoin has done recently, it's actually much closer to the 2017 iteration, the speed of which everything is happening, and the whole move happening during the same month of the year in March. So we're going to zoom into that. I know I've covered this a couple of times in the past, but as we get closer to this, I think it's important to really zoom in on everything that was happening back in February, March of 2017 and compare it to what we got going on today. So when analyzing what Bitcoin has done recently, it is much closer to the 2017 iteration than it is to, per se, this 2020 cycle that we just had, the C19 crash. And during that C19 crash, I think it kind of disrupted a lot of the overall energy in markets. And if we didn't have that Black Swan event, we probably would have less of a chaotic looking structure in that 2020 structure. The 2017 structure that we're looking at right now was much healthier. And if that is the case, what Bitcoin's about to repeat and do, then that's actually super good news, because this cycle was a lot healthier compared to our last cycle, the one that was in 2020, 2021. So we know that this move happened during the same time of year as we're in now. And you could see during February of 2017, Bitcoin was bullish and rallied to a new all-time high into early March. And then that was short-lived. It extended around 7% up from the prior all-time high, which was sitting here at about 1,240, made it up to about 1,334-ish, and then a bigger correction came in. Essentially broke all-time highs barely in the month of March, followed by going a little bit above, 7% above, and then a 33% correction. Bitcoin actually started showing signs of weakness on March 10th, and then it corrected into the 25th of March for recovery. So let me pull up this chart on the side and kind of show you the similarities. So we have here, this would be Bitcoin at 69,000. And what we've recently done is literally almost 7% above. And then by March 16th, we had a 6% red candle after this moment. Just like here on March 16th, we had a 6% red candle and the start of a micro correction. And I just find that to be pretty fascinating that the dates aligned so similarly. These are eerily similar structures. So on March 16th, 2017, we had a 6% correction. On March 16th of this year, we had a 6% correction. On March 19th of this year, we had an 8% correction. I'll show you that. If you just look right there, you'll see it says 8.3. And on the 18th of March in 2017, we had about an 8% correction. So pretty interesting to see this alignment within very close proximity to the days. So it's pretty interesting to say the least. And in both iterations, we broke new all-time highs in early March. We got 7% above all-time highs, followed by a correction. And so far, Bitcoin has only had a 17% correction. If you measure from the highest daily close that we had over here, and then we go over to the pivot date, which I think is very important because that's what a lot of people want to know now. Like, where is this correcting to and how is it likely to pivot? And I do understand Bitcoin is insanely bullish today for being a Sunday, but this kind of stuff, these type of Saturday and Sunday moves are very elusive. And I warned you guys about that last week, and we see how that turned out. The moment the traditional markets opened up, there started to be another sign of weakness entering the market. I'll cover that in a moment, but I just want people to be aware. Saturdays and Sundays are probably not the days to look at charts. It's probably why it's best for me to actually film these on a Sunday to prepare you for the real week ahead. But yeah, this is not institutional stuff going on right now. This is just lots of leverage, bot trading, and a lot of this stuff that builds up on the weekends tends to get liquidated moving into the new week. So yeah, don't get too caught up in this price action today. Just take things for what they are. It's really about when the traditional markets open up that matters most. So I'm just pointing that out now because of this candle that was on March 25th, and obviously tomorrow is March 25th, and there's no need for these days to be perfect, but I'm just sharing the amount of time between the highest daily close we had and the pivot date, and I want us to open up our minds to that. That could very well be the way that this plays out in this current cycle we're in now. Let me show you. If we were to put this from March 13th, which is our highest daily close right now, over 22 days, it's going to take us to April 4th. And that could be something to keep in mind. During that 2017 iteration, if I pull up the I can't really do that right now, but take my word for it, we had a new moon right around here. Bitcoin actually did this pivot 3 days before the new moon. And that's big because we usually don't see us being that bearish around a new moon or trending down into a new moon, that close at least. And I want us to keep that in mind because that could be possible for this upcoming move because of eclipses. Eclipses tend to throw off the way that Bitcoin behaves during the typical lunar cycles. We saw that happen quite recently, actually, over here. We had a solar eclipse here, and we had another solar eclipse here. And between those two solar eclipses, we were trapped sideways. It would be so great if we had some kind of similarity to at least one of these fractals. But of course, the market's not going to do what we want it to do. We just have to be on the right side of it. So getting back to all of this, if we were to take 22 days from the highest daily close to this pivot point, we were about 3 days before the following new moon. And if we were to do that same thing today and take from here over, as I said, it would be April 4th, and that would just be 4 days away from the April new moon. So it's kind of similar actually in that way. And I want you all to remember, that's not just any new moon. That's a total solar eclipse. But all in all, it still lines up nicely. And I would not be shocked if tomorrow, when the traditional markets are open and the CME is open and precious metals and everything is trading all together on Monday, that would not shock me if we had a red day because of how overreacted everything was to the last FOMC meeting, which I'll cover in a moment. Now, another thing to mention about April 4th is that's the day before Satoshi Nakamoto's 49th birthday. It would be wild if we saw Bitcoin trade down into 49K on that day. I'm not saying it will happen, but if it does, that's incredible because we've seen Bitcoin do similar things in past iterations of Satoshi Nakamoto's birthday regarding the Bitcoin price. I've covered that many times, so I'm not going to take up your time with that today. Also, back then in 2017, we did have an eclipse season around that time that Bitcoin was making these all-time highs, but we also do have to, point out the fact that we went higher after the eclipse. That would be really interesting right now. If we saw Bitcoin repeat this exactly, where we have already had a little bit of a short-term correction and we were to just rally for the next 20 days or something and hit up like 80K, I do not think that would be healthy. And I brought that up in the last 2 to 3 Red Pill podcasts. If Bitcoin's going to do that, then sure, we could have like what some people consider an alt season. But I do not think that's what we want right now. It would be too soon. And I think we would probably also have a similar correction. The correction like this, a bigger, more dramatic correction, and it would put us into a longer term sideways market. Believe it or not, the structure that we have over here is actually quite similar to the .com bubble. And I'm talking about the dates in alignment with a correction that came into the summertime, followed by the end of the year being bullish, but then it leading into a deeper downtrend. That is actually quite similar, and I want to cover that later today. I'm not saying that this is like the .com bubble because we have all the same nonsense meme coin, shit coins in this market today that we did here. And that's kind of making my intuition flare up. The same thing I told you guys about the fact that we could barely get above all-time highs in the last red pill, and we had this correction to follow. Like, that's not healthy. That's not proving to be that bullish. It's very much weird. And especially how quickly Bitcoin shifted bullish, and it was all off of a narrative. It's a tiny amount of players that are stacking into this game, and they're all at the institutional level. So anyways, I don't want to start getting off the rails here, but I'm just sharing some of my feelings as we go. Getting back to this fact that we had the third solar eclipse in the solar cycle, followed by a new all-time high slightly after that, that is kind of weird. So we can see Bitcoin move all the way up until the eclipse and then correct after, and that is possible because around this time frame we had two separate 30% corrections. We had one right here and one right here, and so far Bitcoin has yet to correct more than 25%. It's actually only corrected 22% from microcycle tops in all of these iterations over here. So we had this March 10th correction for Silicon Valley Bank failure. We had from the start of solar season into this pivot here in June, again on July highs down to the pre-eclipse lows. And then also here after the ETF launch, there was about a 20% correction. We haven't had anything more than a 22% correction since the solar cycle started last year. So needless to say, Bitcoin has been incredibly bullish in response to every short-term correction. I also talked about that last week, that any dips that we get are opportunities between now and then, especially if you're brand new to this market. So what I just said a moment ago about how Bitcoin has been incredibly bullish in response to every short-term correction, that's seemingly the case today as well. Even though it is a weekend and the traditional markets are closed, obviously bots are always running behind the scenes. And please keep in mind, last weekend was also incredibly volatile as well. And it led to a fake out. You could see right here, I'm going to zoom in. We had last Saturday was a 6% correction followed by a almost 5% buyback. And this was a fake out because we traded sideways and took another leg lower. That's why I don't trust what happens on weekends, because when we're in a bull run, this is the type of stuff you're going to start to see. And these are actually, though, some of the biggest weekend candles that we've seen in quite a while. Usually weekends are very boring, but ever since Bitcoin hit this recent all-time high, we've had some interesting action on the weekends. And I do think it's probably also because we had some things go on with Ethereum quite recently, with the SEC talking about investigating or doing a lawsuit on the Ethereum Foundation. I know that's going to become talk of the town. We're also hearing about some FUD coming out of Europe with, and this is, I don't know if this is 100% confirmed, but allegedly the EU is banning hardware wallets or private custody. I mean, please let me know in the comments below if that's true. And we could discuss some solutions and ways around it. But I mean, I suppose that's the inevitable response to leading into creating CBDCs. So if that is true, then damn, I mean, that sounds to me like the move that government and regulation, like the regulations that would kick in before pushing the CBDCs. I'm not saying it's going to happen that way, but that's the way I would calculate it all. Weird, very weird for that to be happening during this month of March, especially leading into this April eclipse. Anyways, Bitcoin was up about $2,000 yesterday before a rejection, and that could very well be the same story today. I think Bitcoin's pretty much almost up to 2,000 as we speak. We'll just have to wait and see how the CME opens up later today before our weekly close, because I do believe the CME is trading lower than where we are now, and a quick gap fill is definitely something to keep in mind. Now, of course, I'll be covering the in-depth analysis on Bitcoin later in the podcast, because we do have a bi-weekly close. We have some monthly analysis to talk about, as well as maybe 2-day, 3-day charts, and I'll get to that then. And also, another reminder is we're a week out from Mercury retrograde. So let me pull up that chart really quick for you guys. And we have here all these red boxes are when Mercury stationed retrograde. In the last podcast, I showed you how we have a pattern with Bitcoin regarding the time frames when Mercury is stationed retrograde. So definitely check out that last podcast if you haven't already. It's absolutely packed with gems. And essentially, Bitcoin tends to top out in the microcycle around 3 weeks before Mercury retrograde. Then it corrects into Mercury retrograde, and during Mercury retrograde, in many iterations, Bitcoin trades lower than whatever lows it has before Mercury retrograde. So I'll give you an example of what I mean so you have it in plain English. So, for example, if we were to look at the lows on March 20th and 21st, these two candles right here, at 62K Bitcoin, and if we were to hold these lows all the way until April 1st when we have Mercury retrograde, then we have a number to keep in mind. And it would be likely that during Mercury retrograde or the full moon that's after Mercury retrograde, Bitcoin can trade lower than 62K. Similar to what happened actually in the last time Mercury was retrograde. We see right here, these are the lows that we got right before Mercury retrograde. It was at 41K Bitcoin. We were generally sideways, had a little bit of a pump fake out, and then we actually came lower than 41K after. And if we look at the timing, it was around the full moon. So we can have this happen even with the narratives, even with everything else that's going on. But we see right here in this last iteration, the lowest daily close we got was right here. And then we had a daily close with a lower low. Here in this iteration, we have the lowest daily close was right before the start of Mercury retrograde. And then over here, we had a lower low. And if we look at the timing of it, leading into a full moon. So we kind of want to be open-minded to this stuff. I know that there's some iterations where we pump through Mercury retrograde, but I'm going to share the data right now with you all. Basically, whatever the lowest daily close that we have is leading into Mercury retrograde, the closest closure low to Mercury retrograde, we want to keep that number in mind because we still have a chance to go slightly lower during the months of April and May, considering Mercury retrograde is from April 1st to the 23rd or 24th. Now, in 9 of the last 13 iterations, we saw this play out where Bitcoin closed lower lows during or after Mercury retrograde. So that's 70% of the time we did what I just said. And remember, a lot can happen between now and Mercury retrograde on April 1st, even though that's just a week from tomorrow. The traditional markets open up tomorrow after an incredibly bullish week post FOMC meeting, and we saw that final daily close in the red across all the indices. It's just kind of crazy that all of that movement that we had came in immediately after Fed Chair Powell was done speaking. It's kind of crazy to me to see how everyone trades off of what the Fed has to say, literally proving there is no free market. This is crony capitalism at its finest. But anyways, it is what it is. But it was just sad, actually, to keep seeing that be the case. Who's investing in this market? It's all speculation based off what the Fed is doing. And it's too short term for proof that it's sophisticated anymore. Now it's lots of leverage, and that leverage has just swallowed up all the real sophisticated money in this market. It's becoming more obvious every time we have one of these FOMC meetings. So with the same effect that it has in a bullish fashion is the same effect it has in a bearish fashion. And that's why it seems now it's popular, and even many analysts are talking about that the moment the Fed pivots, we're going to have a this isn't me saying this, but they say we're going to have a market crash. I never use that term, market crash, but that's what a lot of people believe. And I find that to be so fascinating how a lot of people agree on that. So yeah, it is what it is, right? Okay, I'm just going to adjust my seat a little bit, adjust my posture. So since I brought up the traditional markets, just remember the S&P analysis I've been keeping you all up to date with, and how between the recent weekly close and the week of the solar eclipse on Monday, April 8th, that is the time frame we typically see the S&P 500 top out during the year of the dragon. That is very important analysis. Again, I talked about it in the last red pill. And after topping out during this time frame of 2 weeks, we usually see a correction into late May or early June. 6 out of 8 iterations went like this, going all the way back to 1928, the year before the Great Depression. And the other 2 iterations, we still corrected into late May or early June, followed by a bullish recovery. And this even happened during the year of the dot-com bubble. Interestingly enough, the highest we traded in the S&P during the dot-com bubble was March 24th, which is today. And of course, the traditional market is closed today, but I just find that to be very interesting how we saw the way that this recent last couple days for the stock market closed up after the FOMC meeting. But this candle right here, Friday, March 24th, and then after that, we went into a downtrend, and we had some pretty nasty candles in the month of April. Interestingly enough, the highs are pretty much identical. I'm not saying that we're in the same thing as the dot-com bubble, but we do have a big shitcoin market in crypto. We do have a lot of ghost corporations, a lot of funny money, a lot of layoffs going down behind the scenes. A lot of these billionaires are de-risking or probably just straight up taking profits at this point. Notably Mark Zuckerberg and Jeff Bezos. And I mean, even the guy over at Dell has been selling Dell shares. Who else? The Waltons of Walmart. I mean, it's crazy to hear how much cashing out is happening right now. And the fact that it's timed for this moment, it doesn't shock me. Doesn't shock me at all. Even a lot of people in Congress have been selling off Meta shares and selling off shares of different tech stocks and rolling them over into stuff that has to deal with defense and cybersecurity and artificial intelligence. It's like, what are they preparing for, you know? I think you guys know, right? We know here. The Wolfpack knows. But anyways, let's look at the NASDAQ chart and go to the dot-com bubble, because I think there's some fascinating stuff that could be helpful for us with analyzing this particular time frame of moving into Q2. So here we have the highest closures coming in on Monday, March 27th, but it was the 24th into the 27th on the new week, and then we rolled over on the 28th, and then things started to really get off the rails by April 3rd. So let me align some of this data for you all. Remember a little bit earlier, I brought up April 4th, the day before Satoshi Nakamoto's birthday, because it was 22 days after the current all-time high. I was trying to, share a similarity between the March 2017 chart for Bitcoin and how between that daily close high that we had to the correction date took 22 days, and how it's so aligned with even some of the specific dates, like the 6% correction on March 16th, and then the 8% correction between March 18th and 19th, and how everything is sort of similar in structure. Well, I brought up that April 4th date because it is 22 days after the current high that we have for the Bitcoin chart. And look at April 3rd of the year 2000. That was a 7% red candle on the NASDAQ. That's wild. And then look at April 4th. Look at that scam wick to the downside. I mean, all in all, that was from the open. That was a 13% correction. I mean, in the stock market terms, that would feel like a crash. But then look, it got all bought up. So this was very elusive, because look at this bull trap. This is how bull traps go. This is how a lot of the bull runs in crypto end too. This is very, very similar. So Lots of weakness on the 3rd of April, a flash correction on April 4th, bull trap into April 7th. And then what's our solar eclipse this year? April 8th. So just keep this in mind. That's all around the same time of the year of our upcoming solar eclipse. And you can see the correction continued all the way until, as I said several times, late May. Right around this full moon. So we recovered actually all the way up until September of the same year. We also, with the S&P, we almost made it back to a double top, I think, by September. So I said this 100% of the time. We have a correction into late May or early June. And let me just pull this up again for you guys. April and May also happen to be the worst performing months for the stock market during election years. You can see that right here. The red lines are the presidential election years. And since we're just a week away from April, this is very important to keep in mind. And by the way, I'm not telling anyone to short the stock market right now. That's not the move. Don't go short in this type of environment. We can have this go all the way until the solar eclipse. And that's why I said it's a window of time around late March into early April is when we see the microcycle top during the year of the dragon, and then the correction we get is around late May into early June. And just because this shows a loss for the month of April, it doesn't mean that the first couple of weeks of April can't be extremely bullish. Remember, these are monthly closes. We can go up and then go all the way down and correct and still have a red monthly close. That even could be the case for the month of March for Bitcoin, which is something we really want to watch out for. Just quickly show you the example here. Turn off all the noise. But we see Bitcoin right now, it's got a little bit of a buyback. But if we were to close below 61,000, we would close this month red, even though it's our top month technically. We've seen this happen many times. Happen right here on this reversal, happen right here on this reversal. This is not what we want to happen right now. These big wicks to the upside are danger signs. And that's what we are definitely faced with now. And you could see that the way that these months closed was similar. I mean, I don't want to FUD anyone out. That's not the point. We're just trying to examine where we're at in the timeline, given the data that we have. Look at how overextended the NASDAQ is. I mean, unbelievable. Lastly, before I jump into the technical analysis for the crypto market, I just wanted to revisit the stock to flow model. That's been on my mind. And point something out that could be worth considering. And it's when Bitcoin is in the dark purple phase, which we're in right now. Essentially getting closer and closer to the Bitcoin halving. There is a correction back to the stock to flow line every time that Bitcoin turns purple, at least in the last 2 cycles. But then we have this iteration back here in 2012, where when we turned purple, we had this correction, and it looks the same as over here. And it also looks the same as over here, even though this was the C19 crash. But remember, Bitcoin was already very overextended earlier in that cycle during this blue phase, about a year out from the halving. That was way too high, way too quickly. As opposed to, you look when it was blue over here, look at how low Bitcoin was. It was much more similar to the 2017 cycle, and that's what I've been comparing everything to today. So with this 2017 example, you can see that we got above stock to flow, just like we are now. And then we corrected back to the stock to flow line, right around the halving, which is this dotted line that goes down the screen. Even in this first iteration in 2012, as I mentioned, you could see right here, turn purple, and then we have this correction before it flips red. And whatever corrections we get right now are opportunities. So let me just show you as of right now where Bitcoin is. Same vibe turning purple, correcting towards stock to flow before the halving. And stock to flow sits at 51,000, which aligns perfectly with the analysis that I shared last week, and I'll be recapping again this week as well. So, of course, nothing is set in stone, but we have a lot of confluence. That 50K to 52K level is extremely important. So let's get into this crypto market and review some of these charts, starting with a recap of the total market cap. There's a couple things to bring up. We have the total market cap right here. We're going to pull up the weekly chart. We're also going to pull up the RSI, and we had 3 weeks ago, RSI was at 88, then on the top week, 90, then last week, 89. That is overheated. And this week's candle closing down around 3% as of now. After this doji that we had is bearish in the short term. Also, the next Red Pill podcast is on March 31st, which is not only the weekly close, but it's also the monthly close and the quarterly close. So it's a 3-month candle. So if this upcoming monthly close for March is below 2.2 trillion, which would be an additional like 10 to 11% drop from here, that'd be a very bearish candle. And, a 9 to 10% drop in crypto is nothing. That's just another day in the matrix for the wolf pack. But please don't take this out of context. I am not saying that if we close the monthly below 2.2 trillion that we will go into a bear market or that the bull run is over. That's not what I'm saying. I'm just saying that would be a bearish candle and can definitely lead to a deeper correction and some sideways, which is actually very needed at this time. And having a phase like that during this stage of the bull run would be very healthy. And it would be in perfect alignment with what I just shared about the presidential year with the months of April and May. In that case, it would be good timing. A little bit of buyback into June, real nice recovery into July, August, moving into the fall time. So don't take this as me saying we're going into a bear market if total market cap gets below 2.2 trillion. I'm just sharing with you the analysis, and it would be a much needed correction. Now, if we were to correct soon, like tomorrow, and for whatever reason during this upcoming trading week before the monthly close, and we saw Bitcoin push down below 60K, that could really well be the opportunity. It could be that short and sweet. And that would be very similar actually to what we saw back in 2017 over here. You see, during March, we corrected and then we recovered back up and just kept it moving. So that's why it's important to take these opportunities if you're new, especially if you're new to the market or if you're somebody who's looking to DCA in. But for now, we do have this upcoming weekly close. I want to get back to that. This will also be a bi-weekly close, a 2-week candle close. And it's actually looking solid because of this back test on the top of the macro golden pocket at the top of the 0.786 fib. So not full-blown bearish just yet, but we have a lot that could happen in this market between now and the end of the month with the monthly close. But this upcoming weekly close is definitely showing weakness. If we were to close 5% down, which we're pretty close to, we're about 4% right now, that would be looking pretty problematic, and I would not be shocked to see a return down to the 702. And I assume the 702 would be in alignment with kind of a similar correction to what we saw back in March of 2017. Effectively, any weekly close below 2.35 trillion. That would align with Bitcoin closing the weekly under 64K. So we don't know how this can go. When CME opens today, we could get pulled all the way down. We could get pulled down to 63K in the same day. I mean, that's the type of buying power these institutions have. Let's go over to the total too. As mentioned in the last podcast, we had this rejection at the top of the golden pocket. And then we've quickly backtested the bottom of the golden pocket. That's nice to see, plus a little bit of a bounce. And what we're bouncing to is the 702. So this looks pretty decent for right now. But I think if we were to close below the 702, which is effectively where we're at right now, that could be, again, a sign of weakness and continuation, filling out this golden pocket a little bit more. Also, one of the things I mentioned about the daily chart on altcoin market cap is this 55 simple moving average. Any time we get below that is an opportunity. So that's a definite solid entry for altcoins. Now, I'm aware that if we were to correct harder than that, we could go deeper, but I'm just saying in general, anything below the 55 on the daily for altcoins regarding this total 2 chart, those are going to be good entries. And if you would look at where we are now to where that'd be about a 23% correction. Onto structure would be about a 28 to 30% correction. That would be in alignment with Bitcoin coming back to that like 54, 53, 52K range. I would assume that'd probably be in alignment. Also, during the last cycle, there was about 45 days of trading inside of this golden pocket range over here. And lately, we've barely spent any time inside of it. So if we were to measure out a similar amount of days, it was about 45 days. If we were to measure out a similar amount of time, that would be leading us into the Bitcoin halving. So I'm not saying that's how this is going to go, but we have such limited data. And Bitcoin has been moving ahead of schedule considering several factors. But again, the timing of all of this isn't as important as the actual entries. I just wanted to share that analysis from the past cycle to give an idea of the way we trade around this stage of the bull run. And effectively, it lines up with the time frame that we typically get a short and sweet correction that gets bought up pretty quickly, and then we continue. Although I would love some sideways. It's not just because I'm selfish, it's because I want better market structure. I don't want us to have to go through what 2021 was like. That was really, really not as fun as a lot of people might think, what a lot of people might want. Yeah, and there's so much memery right now, and there's a lot of distractions, and that's how 2021 ended. It was the same noise. Anyways, getting back to this. Skip over a couple of these things. I think it's important to just mention that I brought up any entries under this 55 simple moving average on the daily on the total 2 chart, and kind of just putting emphasis on that because I know a lot of people are mostly going to want to get in altcoins. I myself will be accumulating some more altcoins if that was to occur. I'm not going to wait perfectly for any particular indicator to, it's not how it goes right now. We're in a very speculative stage. Just any break of structure, which for right now, it's around 62K to 61K Bitcoin. Any break of that structure would be time to start building some positions. Let's move on. Essentially, all dips are opportunities to dollar cost average. God, it's so funny. This is like last weekend. Bitcoin being up 5% on a Sunday. Having it be up where it's at right now on a Sunday is so silly. Let's go back to the Pi cycle chart. We've reviewed this a couple times, but I just wanted to share it again really quickly how Bitcoin has rejected off the top of this green line after a couple of days of being overextended above this moving average. And what Bitcoin typically does is it comes back to this gold moving average. Every time that it tests this level, it comes back to this gold moving average, and it actually closes some dailies below it. This is the 111-day MA. So let me show you what I mean when I say below it. So it's right here. The play-by-play is Bitcoin finishes a cycle, then we see it come up to this green moving average, it gets rejected, and it comes back to the yellow moving average. Here, we have end of cycle, we have returning back to this moving average for the first time, and then coming back to this yellow moving average. Same thing happened back here too. But what I just shared a moment ago is how we tend to actually close a couple of days below this golden moving average after we get rejected off the green. You can see that over here. And we could see that over here. This was where things started to get pretty rough, but we're now first coming up to this moving average today for the first time. And it was in this month. Let me just reload this. And you could see this is sitting around 49,000. So I'm not saying that Bitcoin is definitely going below this, but if it was to, any daily closes below this moving average would be incredible opportunities. We might only get one. We might not even get one. It would even be a gift if we just returned back to that level, because that would be about a 20% correction from where Bitcoin's trading today. And that would definitely put a smackdown on the altcoins. So just consider that. Just consider that we typically come back to this moving average in every time we've ever hit this green one first. It was every time. Also, I believe in the last red pill, I shared that this 111-day moving average aligns with the weekly chart 21-week exponential, excuse me. It's such a shame my internet is so bad. I wish it could get better, but it's been really bad the past week. That's why it's taking so long to load some of these charts. But anyways, you see this orange moving average here. This orange moving average as we speak is at 49,000. So it's right what I was saying over here with this pi cycle golden moving average. Funny that they use the same color, but yep, sitting around 50K. And we saw back in 2017, every time Bitcoin had a correction, it would come right back into this golden moving average. So you see right here, there, which is where we're kind of at right now. And then again over here, this was really bullish phase and about a 40% correction. Again, tap on the golden moving average, and then we topped out. And then once we started closing a weekly below it is when things started to get pretty rough. Now in the last cycle, I kept telling you guys, like, we don't want a repeat of last cycle. Well, last cycle, we just went all the way up with no back tests. And then once we closed below the 21-week EMA, that was lights out for everything. Here, having these corrections along the way was much healthier. It led to a more sustained bull run. There was more gains overall. And yeah, that'd be great if we could have something like that, or maybe even better. It'd be great if we had an even longer cycle this time. I mean, something more like the recovery after the .com crash, where we saw Amazon went on like a 10-year bull run with less gains overall, but the structure was so much more proper. It didn't have these huge crashes all the time like we do in crypto. In crypto, even in Bitcoin, it had a 70% correction last cycle. You know, so I believe it was about 77%. I mean, imagine the Dow Jones crashed 77%. What the hell? It'd be the end of the world pretty much, you know, but in crypto, that's nothing. Like, we're used to that. Well, that's also what's making it so difficult for big players in the game to care about this market. It's too volatile for them. And perhaps, you know, with these ETFs passed and BlackRock buying up all the Bitcoin, it's changing now, but that's a new development we're talking about within the last quarter. Can't bank on what's been going on in the last quarter. All right, we're getting a 3-day chart for Bitcoin. Yeah, today's buyback is very fraudulent, but anyways, we could see that we had three 3-day closures in a row that were red. We want to keep this in mind because if we were to close anything in the red on this upcoming daily close today, which would be below 65,500, that would be the fourth red candle, red 3-day candle in a row. It's not looking good. But we had 6 in a row of green leading up to this local top, and that was short-lived. But seeing 6 in a row of 3-day candle closes green is not common. And of course it happens. A couple times in the past it's happened. One of the recent times, though, was 2020 leading into 2021, right around here in this phase. And then during that, we came and we had a pretty sharp correction. So let's keep that in mind. Let me see. Yeah, we had 1, 2, 3, 4, 5, 6. And then this led to, after that pivot, 1, 2, 3, 4, 5, 6 before moving on up. Obviously mixed candles, but pretty fascinating how that was the length of time of our candles. We have 1, 2, 3, 4, 5, 6 would be leading you into like right around our monthly close. And that would be in alignment with what Bitcoin did in the last, in the 2017 cycle, where we had our lows in the month of March. Be really wild to see if tomorrow is a big red candle. That would be crazy if we were to repeat that. But I don't know. It would be too crazy to see Bitcoin do a 19%. No, I can't buy it. I mean, the idea of trading into the Mercury retrograde, which is April 1st, and then having a sideways and maybe down effect, that is more likely, and that'd probably be the case. Let's look at this daily chart. We have the 8 simple moving averages showing some resistance, but today we're getting a little bit of a buyback. Also, this 21-day moving average, we got back above it, but then on Friday's candle close, we closed below it. We've closed below it yesterday as well, and today we don't know until the end of the day, but you want to keep an eye on that 21 EMA. And more importantly, we're starting to see all of these moving averages coil together, and the 8 has crossed below the 13. So that's a sign of weakness, and it's the start of a flip of the EMA band. So any daily closes below the 34 EMA, that's where you start to see some problems. And if we were to have the 34 cross above the 13 exponential moving average, that's definitely where you would start to see a deeper correction. Just keep that in mind. I teach that in my advanced trading course, by the way. The 34 crossing above the 13 is typically a time frame where you start looking for some short positions, but I'm not telling you how to trade this market right now. I'm just revealing to you something that I've been doing for a long time now, pretty much 4 years plus. I've been using that particular cross. And on the 12-hour chart, we've definitely done that. We've had to have done that. Yeah. So it came in over here. Yeah, we're getting a lot of these. All of the EMAs are coiling up together right now on the 12-hour chart. We have the 8, 13, 21, 34, 55, and both 200s are sitting below here at 52, which is right in that range that I told you guys about. That was the last time we traded sideways. That's at the 111-day moving average. That's at the 21-week exponential, like right around all the same area. It's pretty important. All right, and then if we wanted to go really short time frame, like the 4-hour, you want to look at the 200s, and we've yet to close below this dark green moving average. This is the 200 simple on the 4-hour chart. If we were to start closing below that, definitely that would trigger a continuation to the downside. So reminder, a 30% correction from where we're at now would be 52K Bitcoin from the local top. Anything below 52K would be a huge opportunity. So don't get greedy with the difference between 45 to 50K Bitcoin if we happen to drop lower. And I say this mainly to those who are new to investing or are looking for entries. It's just an opportunity to DCA into this market. And there's nothing wrong if we were to break below 60 to just start kind of chunking in there, because you don't know. You never know if we're going to bounce at 56 or 57. Anything is possible in this market right now. It is extremely bullish, and what the market maker will do is everything to manipulate you. Just like we saw over here, where we hit the all-time high and then it followed by a couple of 4-hour candles that made it look promising. And then look at this. This was an 8% 4-hour candle that we got and then bounced bullish. This is the kind of stuff they're going to start doing to you. Like a lot of liquidations happening here. We even saw over here, we got correction, and then we had the FOMC meeting. We got bullish and everyone was ready to long, and then the market reversed. This type of environment is just a buy the dip environment. Anyways, let's move on to Ethereum. We're going to be really quick with ETH. There's not a lot to say. We're just correcting. That's it. Like, we're in the start of a correction. Also, if you want to entertain the fact that there is a head and shoulders in play on Bitcoin, Sure. The head and shoulders target would bring you down to the same supports anyways that I told you about 52K. All right, so we had a wolf cross on the 4 hour over here that was assigned to GTFO, and after that moment, we've had a 22% correction thus far. Had about a 25% correction. We're gonna have a buyback along the way. That's natural. Let me look at if I was to pull a fib from the current high to the swing low and see where we've gotten. Oh yeah, we've already hit the 0.5, so that could be a dead cat bounce in play, especially if we are failing to retest these longer term moving averages. Let me go to the 12 hour. We had the wolf cross on the 12 hour with downside implied. That means the 55 crossed above the 8. Let's see what's going on the daily. Okay, let me turn off the drawings. We have the 8 crossing below 2 key moving averages. We have the 34 is flatlining, and as I said, when the 34 crosses above the 13, that's a sign of more weakness. And then you could also consider this 55. We usually hold the 55, and then when we any time below the 55, like I just shared with you on the total 2 market cap analysis, which Ethereum makes up a majority of the market cap of, you would want to be getting in. I'm not saying to buy ETH at this point, but if you start to see ETH closing below the 55, that might be the opportunity to get a little bit of the projects that you're personally interested in. For myself, I already mentioned I'll probably be picking up some new plays such as XDC, Dogecoin, maybe Sand. I'll see. I might play in some AI stuff. You know, maybe if you guys want to share in the comments, what are some of your the most intriguing AI tokens? I also think the Proppy chart is very fascinating. I have reviewed it a little bit more. I don't want to get too crazy though, because this market is unregulated and we have no idea what's coming next. And if the SEC comes after ETH, that would be a black swan event for crypto specifically. It won't affect Bitcoin at all. But everything is built on ETH pretty much. Like the whole shitcoin market is built on ETH. So yeah, that would be wild. A lot of market cap will drop off of this market. And my assumption is some of it will go into stable coins and a lot of it will go into Bitcoin. That would be my assumption. But I'm not going to say that's how it's going to go. I haven't had enough time to decode that particular thing because that update happened as I was in the middle of an interview with Good Morning Crypto. 3T Warrior Academy. I haven't had really too much time to check in on that. But I'm not going to get fudded out of ETH. If they come after ETH and ETH has a huge correction, I will 100% buy that dip because that's what happened that's what I did when the SEC came after Ripple, and the lowest Ripple went since was like days after that lawsuit happened when the exchanges started delisting XRP. I don't think they could delist ETH. How could they do that? Every other altcoin is built. Yeah, that would be too much chaos. That'd be too much chaos. I kind of want it to happen. I think that'd be funny. Even though I hold a bit of ETH, I just think it'd be kind of interesting to see the reaction to that. Like, what would the market do? Maybe you guys can share your conspiracies in the Discord. It'd be cool to know your thoughts. But anyways, yeah, this isn't looking so great. Daily closure support somewhere around 31.55. That's in alignment with the 55 simple moving average. Any daily closes below the 55 simple moving average would be weakness. And any daily closes, I think, getting back into the 3,800 level would show a pretty positive performance. But I think what we're going to see right now, in my opinion, is that Bitcoin dominance is going to start going up. Especially if we get a correction. I think we're going to see Bitcoin dominance go like up to 57, maybe 58. That's how I would imagine this all goes down. XRP got a little bit of a jump. Got a little bit of a jump a couple weeks ago. We're holding stable. This is very, very lackluster performance. Excuse me. We did get a couple of back tests here at this 200 simple, 200 exponential, as well as the 55. That's great to see. Keep that in mind. Anytime you're going to back test moving averages like that on the daily chart, that's a solid buy-in. So I would just keep eye on that. If we are to be getting into anything around 60 cents, below 60 cents, that's good. And I don't know if XRP can go much, much, much lower. Like if Bitcoin was to continue another 20% correction from here for a full 30% correction from the all-time high, yeah, I don't think it could affect XRP that much. But so far, we brought up analysis in the past of how 2017 went in the month of March, April for XRP. And we're not seeing that effect on XRP, and it could very well be because we don't have this case over yet. That's why I've said it will most likely be due to some developments with the case, and that could happen any day. Like it could happen quite randomly, I believe. And I know there's dates of the case. You guys should keep those in mind if you'd like. But in the month of April, it would not shock me if there's developments in this case that lead to whales pushing the price up due to pure speculation. And then we could have another correction after that, but that's kind of the play here with this project. Until there's full-blown clarity and this thing is over, it's going to chop. Unless, and the big unless, is if Bitcoin starts going into 77, 85, 90K, then yeah, I do think XRP is just going to do what it always does, and it's going to follow along everything. But if Bitcoin's going to be trading in this way right now, getting rejected after new all-time highs, pushed down, well, there's really no reason for XRP to run unless money goes into the project, and clearly there is none. So yeah, there just needs to be development in the case, and I assume that'll be coming very soon. Most likely in the month of April, we'll have something come up magically like it always does. But for right now, entry level, anything around these three key MAs, or just call it around 57 to 58 cents. And if Bitcoin is going to correct more below 60K, then yeah, this 54, 55 cent area would be of interest. I just don't know how much lower they could really push XRP. Unless there's a negative thing that comes up about the case, and that's always possible. We're going over to ecomi. It's been some time. Wow, my internet was working so perfect up until midway through this podcast. All right, what are we working with here? We're on the daily chart on ecomi. Oh, we're getting some more candles showing up. It's like a magic trick. All right, all the way back to March 2021. So we have the full 3 years of chart data. This has been on a perpetual downtrend since it launched. It's 93% down from data going all the way back in 2021. So yeah, that's bad timing for this to be launched. So we're looking at this logarithmic chart. We're going to double click. We're going to go down here to fib levels based on log scale. And we have yet to clear this 382. So what that means is if you're somebody who's interested in this project, it is in an accumulation zone. Anything below the 236 is accumulation. And you can see very clearly here, since we had these 200 days of testing this level, then broke below it, confirming it as a resistance on 3 separate attempts that are pretty spread apart over a year. 500 days of resistance at the 236. This is clear to me that it is getting ready to pop. We have a W breakout. We have a back test potentially of the neckline, and it's pretty much right where in the middle of the zone. It's right there in the middle, 50% through. Just getting back to the golden pocket would be 700%. Just getting back to the top would be around a 10x. But yeah, this is an area of interest right here, somewhere between the top of this golden pocket, upwards of not even 8 cents, 0.008. That would be the zone that I would not be shocked if this project cannot get higher than that in this bull run. This is not something that I'd be betting on going into price discovery to the upside. Right now, it's in price discovery to the downside. That's not good. Bitcoin right now has traded into all-time highs already. This project has only gone up 40% since the last alt season. That is not good. This is a shitcoin chart, pretty much. Again, I'm not trying to be offensive here. I'm just This is the Red Pill Podcast. You're here to sweat in the sauna with me. It gets hot sometimes. We need to spread the truth, and that's the truth. This thing has made no progress in this bear market. It has just been perpetually going down more and more and more. Even January of this year, 2024, it has cemented new daily candle closures lower. This thing is in price discovery to the downside. So at best, if this next bull run happens and this thing doesn't get completely obliterated by some sort of regulatory clarity, then yeah, it has a chance, I think, to make it back up here. But I don't know if I would trust that it has the capabilities to go into price discovery. I don't know how many more bull runs ahead we have that are like that, where you can just take any random project and expect it to do amazing things. But keeping in mind the technicals, the fact that we don't have prior bull runs for this project, although I know sometimes we have charts that don't have all the data. This was the best one I could find, but this is not important to me. This looks like a distraction project. But hey, if you want to play venture capital in it because it fits into your investment thesis, go for it. Every time it gets up to this level of 001, it gets smacked down every time. I don't really know what we'd be betting on with this one. Hope. Okay. Let's go to Veracity, VRA. Gonna let this take some time to load. Okay, so this is looking better than the last chart. So off of these, the bottom, we're about 350%, clearly lots more progress than the last chart. Also, we have been able to break above the 382. Very nice. That's a sign of bullish momentum and sign that we're moving into a bull cycle. Although we've gotten rejected at the 0.5 fib, and we don't really have a whole lot of structure and also not a whole lot of chart data. This is still looking a lot better than the last example, for instance. We're still pretty much chopping in the same range that we've been in for a year and some change. So really what would make this impressive is if it could get back above the 0.5 fib. We just want to keep this 702 in mind because we can see here that once we get above that level, we've either gotten rejected off of it or we have sharp spikes. But in my opinion, if we can clear the 786, which is a very technical move anyways, if we could get above that 4 cent level on Veracity, then it could run. And I do think this is one of those projects that can absolutely make it up to price discovery and, you know, get into maybe the 30, 40 cent and higher levels. I mean, just 2 prior all-time highs is still 700% like the last project, but it has made progress off of the bear market lows and also has made progress recently with breaking above the 382 fib. It's looking more bullish. But yeah, not a good looking chart still a shit coin chart. I'm not calling the coin a shit coin, even though it probably is. But yeah, this type of thing isn't impressive. Compared to the last project, it might look impressive, but in the grand scheme of things, no. Yeah, this type of move anyways was all just triggered by altcoin mania. And one thing I find interesting though about Veracity is it went up to make a bull trap in Q4 of 2021. Not many projects did that. So that's pretty cool to see. It followed Bitcoin. Not every coin followed Bitcoin in this move, but this did the same thing as Bitcoin. So it hit its highs in April, corrected into the summer, and then it went back up into November before entering the bear market. And it lost, let me see, I would assume this thing also lost about 95. Oof, okay, 97, almost 98%. So that would be the bottom, I would think. Also, this would be like your preliminary support levels. And the 236 is unlikely to be retested, but just for fun, just for shits and giggles, yep, I do feel like that's a possibility. Ooh, okay. You could always double click and extend. Ooh, okay, so that's fucking gorgeous. All right, so you have launch correction, backup phase after an SOS, launch, return right back to it, and have been holding higher lows since. If we correct, this is the trend line. That's juicy. When you see shit like this line up, that's really gives you a lot more confidence. It's like the Caspa chart. We had this long-term trend line running through it, and like every time it comes back to it, it was bouncing. I'm not sure what Caspa's been doing lately, but that was the case in the last couple times that I covered that project. So yeah, I mean, it would also be effectively right in the middle of this range that we've been ranging in. So yeah, I'm not saying it'll go back to it, but just keep that in mind. Okay, let's move on. Not the worst chart in the world regarding VRA, but still, yeah, pretty rough. Flux. Okay, very bullish. Incredibly bullish breakout. We had this trend line, which I guess I've done some TA on this recently. I'm not sure. But yeah, so we can see it had multiple rejection points on this trend line, and then we back tested it to confirm exactly at the pivot point of the 236. That was an incredible entry opportunity on this, because you can see ever since that double back test, not only the back test of this resistance trend line confirming it as a support, but also in alignment with the 236. You don't want to disregard that. And now it's been up a couple 100%, so looking pretty good. And because it's only about, it's less than 200% away from all-time highs, this is not a buy for me personally, even though this recovery has been very strong. It's just I don't want to bank on price discovery on a chart that has such limited data. But if I was to, I would keep it about 2% of my portfolio just for fun. And could it go to the 1618? Sure. Given the fact that it got bought back up so quickly and it's trading within the golden pocket as we speak, that's looking good. As opposed to the first chart we looked at, Ikami was trading below the 236. You know, that's quite a difference. Coincidentally, when you look halfway through the 236 was all of the supports. So not the craziest move lately, but still pretty awesome. I mean, I think Bitcoin's even been up 200% in this, like, way probably, yeah. Yeah, Bitcoin's been up 300% since the bear market, so that's fucking crazy, dude. To look at how Bitcoin is performing against all coins right now is just madness. It's the king, you know? I hate to say it, but it is. Every cycle so far. Pretty wild to watch, pretty wild to watch. All right, not too much to say about this project, but because of the speed at which it went up and the way that this coin likes to come right back down, I would not be surprised with the back test of the 0.5 fib. If it starts to break below the 0.5 fib, this 382 needs to hold, because if it doesn't, then this is going to it's going to destroy the confidence, and then you're going to have it slide lower. And if it slides lower, it's going into this trend line. But we can see the last area that this traded in that was sideways was right between the 236 and the 382. So coming back to that would not be bad. But yeah, that's a little steep of a correction. I'm not too sure I would bank on that right now unless something really bad happens to Bitcoin. Or something isolated happens specifically to this project. Of course, there's always room for that. But yeah, having it get rejected at the 702 very much looks like like we're moving into what I would call a backup phase. So this would be your selling climax, automatic rally, your spring test, SOS, and after your SOS, a backup phase is normal. So some sort of cup and handle deal. Pay attention to what I'm teaching you guys right now. Okay, so here's your buying climax, selling climax, automatic rally, lower highs, spring phase, and then once you get out of the spring phase, you have this test, which back tests a critical level, and then you shoot up very sharp into this golden pocket territory in the macro, and then that is your opportunity to have a little bit of a cool down, and then have this backup phase before moving into further SOSs, PSYs, SOSs, backup phases, etc. using Wyckoff method. I teach this all in my Crypto Mastermind course. Okay, let's go over to AMP. Whoa, what's going on here? This shit fall off a cliff? Do I need this data to load? Oh my god, what am I looking at? I need to let this load. Is that the C19 crash? What is going on with this project? What the fuck am I looking at? Yo, this is getting crazier. Oh my God, I don't know what I'm looking at. That's the C19 crash. This thing is 70% below. Oh my God. That would be like if Bitcoin went to like $500 now, today. Right? Because the C19 crash was 3 grand Bitcoin. Yeah, that would be like if Bitcoin went down to $1,200 today. Like if Bitcoin was trading at 1,200 today. Oh my God, what the hell is this chart? Oh my God. I'm just having fun, but for real, this is horrifying. Okay. I don't even know where to get started. I guess some people might be bullish because of this recent move. Watch this be like 600% or something silly. Yeah, look, 500 fucking 50%. Of course it is, because you lost all of the value. 99.9% down from all-time highs. What is this? I don't remember doing TA on this in a while. Is this accurate? This has to be a glitch. This has to be a glitch. I don't feel good looking at this chart. It's like making my stomach hurt. Can I get another chart, please? This is like when you order food and they don't make it right and you're like, can you redo this? I asked for no tomatoes. There has to be another chart for this. This can't be. There we go. That's a chart that I've worked on in the past. Oh my God. Is this the same? It's okay. It went to 12 cents during June 2021. Oh my God. Yeah. What the hell? All right, dude. I don't know what to say. I'm going to do my best on this. This is crazy. Gotta get it together. Okay, I'll turn it to area so you guys could kind of see what the hell I'm attempting to do right now. It's just too hard. This is insane. We could be in the process of breaking out though. Yeah, that could be it. I want to do it like this because this first impulse is the real top, and this type of move like this is to just liquidate in both directions. So that's a false breakout. It's like a higher high bull trap. It's very, very elusive, and you could tell by this like Christmas tree top after having this Christmas tree top. And then the slide after makes it obvious. And then look, this shit crashed all the way down to like a fraction of a penny after being $1. And then it comes up for this AR. Like, how is this possible? What happened to this thing? Did it get like a stock split kind of? Like, did it get split? I think that happened with Lend. Remember, it was called Aave, used to be called Lend. Is that what happened? That's the only thing I could imagine that happened. This is crazy to look at. Anyways, getting above the 236, I guess, is good, but you'd really want to look at the 382. Let me look at this chart and see if this helps me. Okay, I mean, sure. I'll play this game right now because there could have been some sort of split where like fractions of this got broken down into smaller increments. You know, they do this with stocks. I know that it's happened with some cryptos. That could be the case for AMP. I'm just using my imagination right now because that last chart looks insane. But this right here even is a full probably 90 something percent correction. Yeah, 99% correction. That's crazy. All right, well, it's moving up very fast, breaking out above the 382. So this is the recovery phase. And but it looks like an automatic rally to me. It doesn't look like an AR spring. I don't know if I confidently, I mean, sure, it's just too little of a move. This is stumping me because I don't know what chart to trust. Okay. Let's go to the weekly RSI. Oof. Crazy overheated. Yeah. Okay, this thing needs a correction. This 382 area would be good for it to like chill out, but right around here at 005 is some horizontal range to play with. 005 to 006. So just keep that in mind. I apologize. I can't really do too much TA on this because the way that these charts look. But now, if I was to revisit the last chart, if we were to go back to that high, how much would that be? That's probably like a 10,000% move or something fucking crazy like that. Oh no, I was looking at the right chart. Apologies. Yeah, what would that be to go from 008? Yeah, look. Oh my God. That's exactly what I said. It'd be a 10,000% move to come back to the all-time high. Fuck me. Yeah, I don't know. Crazy. Unbelievable. Still a 10. Fuck. Still 1,000% to even get back to 12 cents. Wow. This might be worth throwing a little bit of, just a little. Throw your pennies in the well, kids. Yeah, this could be fun. It's on Gemini. I wouldn't mind throwing a little bit in this Hail Mary pass in the fourth quarter. But yeah, it's very tough to do TA on stuff like this. This is not looking so good. But yeah, just keep those levels in mind, I guess, if we're going to have a little bit more of a correction. 005, 006. Or let me just be very simple. Anything below the 382 is probably solid entry for those that are interested in such a thing. And we're going to quickly check in on Hex. This is the EHEX chart. I'm aware that recently we've had this very, very sharp correction breaking below the lows actually that came in October. And everyone's telling me that it's because the founder, Richard Hart, has essentially told the community that this is no longer the chain to use regarding Hex on Ethereum and to move over to Pulse Chain. So it's now, 100%, I guess, everyone converted. And that's why we saw this spike up on March 10th. But I have a problem with this spike up because look at what's been going on lately. So there's a technical play here, and I'm not going to spend any time on Hex. This thing's toasted. I'm just sharing this to give you an update from my last time reviewing this, where I was already sketched out about the project. But we have a huge triangle pattern in play. And I do believe this was one of the last times that I covered Hex, and it got pretty bullish off of this move. And if we look at what it's done to today, we're about 70% up. And given all the money that is left EHEX, it has not really floated into Pulse PHEX because we're lower today than that update. That's real than before the update. Like after that update of telling everyone in the group, I don't want to, I'm being kind here, calling them a group, all right? Everyone in the Hex community, the Hexicans, they're telling me that this is people leaving EHEX and going to PHEX. But this slide is not healthy looking. That's a problem. But let's look at things as sophisticated traders and not, we're not, I'm not going to say it. Anyways, we're at the 382, back testing the outside of this major resistance that has been in place since this thing launched. We got 1, 2, 3 times a charm, still corrected, and then we broke out on the fourth attempt. Here on this fourth attempt, which I guess you could technically call the third, we snaked around, had a little bit of this like UTAD effect, and this is a distributional top. This is not a good sign, especially if it's narrative driven. But what is nice is the fact that if you just take everything regarding the story behind Hex and just look at the chart, you pull up the fib and you look at the chart, we went through the golden pocket, the 786, and came back to the 382. That is a sign of strength, and now we're in a backup phase, and we're back testing prior resistance. 1, 2, 3. Now we're back testing it. That's bullish as fuck. I mean, I see it's up 15% today, so whatever's been going on in the past couple of days was really, really bearish. But yeah, from a technical perspective, this looks pretty fucking good. But if we were to have more updates, I guess, with the SEC and Richard Hart and what's going on with Hex, this could have what's called a kickback. And a kickback is when you go back into the pattern's support or back into the pattern's resistance in either direction. So a upside kickback would be where you're breaking down bearish into a pattern and then you come back up into the resistance before the apex of the pattern. So the clear apex here is about May 22nd or around the May full moon. And we could effectively have a retest of this support, which would be in alignment with the 236. That would be a really good opportunity, I think, unless this thing is toasted. And I don't know, man. I can't tell anymore with this project, but it has not performed that well since the start of this bull run. Yeah, I mean, this project is down 99.9%, and there hasn't really been a true rotation of everyone leaving EHEX and coming to this, clearly by the charts. So, yeah. But from the technical perspective, coming up into the golden pocket, rejection back down to the 382, and then bouncing on the outside of this prior resistance, that's a pretty bullish setup. Even though it's not looking bullish, it actually is a bullish setup. And this would be what I would call a backup phase. And I showed you before when I drew it out. The backup phase is like a cup and handle type thing. All right, so I'm going to leave it at that. It's about an hour and a half into the podcast. I appreciate every single one of you. Oh, by the way, I'm not going to invest in Hex or PHEX. I don't trust these type of charts. It's not interesting to me. It's too narrative driven. It's tied to somebody that I don't really know if I align with their promotional scheme. I'm not going to call it a scam, but their promotional scheme. I'd rather stay out of it. And looking at what just recently happened to EHEX and what has been going on recently in this PHEX chart, I don't think anyone could blame me. It's clearly not showing to be the opportunity that I think it sells itself to be. And that's fine. There's nothing. I mean, the XRP community is going through a similar thing where it's mostly just doing what it does because of the communities behind it. And there's very little TA. And that's, just part of the game. I've always been one to de-risk XRP when I know it gets overheated, even if I know there's a long-term vision on it and I'm aware of the partnerships and I'm aware of ISO 2022 and I'm aware of regulations and this, that, and the third, and it still doesn't change my trading plan. So if you're somebody who's a good trader and you're able to make moves on this Hex play, then go for it. I promote that. Just be weary of the cult that forms around these sorts of things. That's all I can say. So I'm going to wrap this one up here. I hope you guys enjoyed today's podcast. Let's chill for the rest of the day. There could be a lot going on in these markets once CME opens and the traditional markets open up tomorrow. Let's wait and just see how this all goes, and then keep in mind what we talked about today. Definitely take notes and rewatch this episode if needed, and appreciate and grateful for every single one of you. Maybe next week we'll do something special for the 3rd year anniversary of the Wolfpack. Much love, family.